Yeah.
Hi, everyone. It's Brian Pate from the Pate Realty Group and Brian Pate Seminars in Wake Forest. And I want to welcome you to the podcast, The Pulse on Real Estate, where we are unscripted, unfiltered, and unapologetic. Today's guest is my good friend Scott Walton. Scott is a mortgage lender here in the Raleigh, North Carolina area, and we've been friends for a while. This is his second go around on the podcast. Scott, tell everybody about yourself and where we can reach you if we needed any assistance with a home mortgage.
Yes. Well, first, thanks for having me on, and I hope you and Kirk have a great holiday season. Scott Walton with Novus Home Mortgage. I've been in the real estate slash lending world for 25-ish years. Um, Moved to North Carolina from California in 2018, basically. Um, Been loving it. Love North Carolina. Love the people here. If you want to get a hold of me, you could reach me at 919-530-9977 or swalton at novushomemortgage.com.
Very good. Very good. Well, let's get right into it. Today is December 22nd, and
Yep,
2 days ago, the Fed lowered rates again,
it was a great
and
day.
mortgage rates jacked a quarter of a point
Yep.
almost overnight. Tell me why.
So they cut the Fed rate, which is your short-term debt, credit cards, car loans, savings account, that type of stuff. The mortgage rates jumped on the future outlook of the Fed rate cuts for 2025. So, 2 meetings ago, they had a dot plot map which showed 4 rate cuts in 2025. That would equal out 100 basis points. Um,
For those of you
they,
that need the English translation, that's 1 point.
yeah,
100 basis points is 1 point. 25 basis points is a quarter of a point, just for those of us that speak English and not mortgagees.
thanks for deciphering that. Appreciate that. Um, so now it's 2 cuts totaling 50 basis points or half of a point.
Got it.
Yeah.
So why? Just simply
The
why?
the big reason is their outlook on what inflation is going to do. They basically thought before inflation would be a lot different than what it is now, and so they're thinking that the inflation is going to stay a little bit higher than they originally thought.
So obviously they've been talking about a target of 2% inflation.
Yeah,
We're back up on the three handle based on what I saw most recently.
right.
Jobs are being hit. We've had a couple of larger layoffs from larger national companies.
Mhm.
The government's talking about a shutdown. Current, if we're talking, if you're watching this today, again, this was recorded on December 20th, and the government shutdown is basically 10 hours away and looming over us
Yeah.
after a failed process of Plan A and Plan B. How does the government shutdown have any effect on this, and what influence could it have on the market?
Not really. So today we actually got the core PCE inflation reading for November, which actually came in better than the expectation, which is kind of weird considering on Wednesday they were saying inflation was coming in higher. The bond market like that. We've recovered small amount of ground from earlier this week, but I'm not seeing any activity as far as the government shutdown affecting that.
Okay, gotcha. Gotcha. So where are we right now? Are we in it looks like we're in about a 6.875 to 7 1/8
Yeah,
range
exactly.
at the moment.
So I looked it up. Kind of the average fixed rate mortgage is right under 7 or just right above, depending on what you're looking at.
Right. Okay. And
Yeah.
so if we look back let's talk historically.
Mhm.
Again, we're gonna discuss what it used to be like for those of you that are younger out there, for you millennials and you Generation Alphas. Um,
Yeah.
the median mortgage rate for like the last 35 years has been 7.7%. The challenge with that is that the house prices have skyrocketed in that time
Hmm.
frame. Big difference from 7.7% of a $35,000 house in 1976 to a $100,000 house in 1987 to a $150,000 house in 1990, then a $225,000 house in the mid 2000s. mid 300,000s in the 2000 teens, and now here we are 2024, and our average sale price in the triangle market is $410,000.
Yep.
So at what point do you think buyers come out of the woodwork? Where do we need to be? Is the 6% that magic number where all of a sudden people start going, yeah, it's different now, let's get in? Or are we waiting to see if prices subside before we do that with people playing the market?
Yeah, I feel that if you're a first-time home buyer, you're going to try no matter what. If you're just overpaying the rent and done living at home with your folks, I do think there's going to be some people in the market that have a lower rate and they just need to hit reset for various reasons, paying off debt or whatever. They're going to either refinance or they want a bigger house. They're going to sell and get rid of that rate and move into a new house. Um, but I do think the big trigger is when it gets into just below six, when it gets into the high fives is going to be your massive trigger. But as it, if it ever comes back down, as we get closer to that 6%, you're going to see the market kind of speed up accordingly to that as the rates drop.
Gotcha. And of course, the challenge with that is prices appreciating around 2.25% this year in the
Correct.
triangle market, which means a $500,000 house just went up by 10 grand. So if you're
Hmm.
waiting on the interest rate to drop 0.5%, you're kind of losing out by
Correct.
waiting. And you're
Yes.
probably better off at this point, just going ahead and jumping in the pool without even testing the waters. Just get in there and buy something because you can't outsave the appreciation, basically.
Correct. Yeah, I always tell people don't look at the rate. I mean, obviously you have to look at it to make sure you qualify, but the biggest thing is buying the house that you want and you know you can afford and long term is going to have some appreciation and success for your family. And
So one of the things I've been talking about for the last couple of weeks is the fact that um, the premium between new homes and resale homes. For many years, the premium difference here in the triangle market was about 16%. So whatever you were going to pay for a resale, add 16% to it, and that's what you're going to get in the resale. This year, we've seen that number drop down to only 3%. And so
interesting.
there are a lot of people that are doing that because with that 3% difference, and then the lenders for these home builders, especially the national home builders, the
Mhm.
Lennars, the Pultes, the D.R. Hortons that are using their own lenders, they're playing games with the mortgages in order to make the properties move.
Correct.
Lennar just came out this week on their earnings call and said for their investors to expect decade lows in their profitability in the first quarter and the second quarter of next year because they're having to cut in order to get properties still moving
Correct.
and to
Yeah.
get inventory still moving. How do you as a lender I mean, is there a way for you to compete with that if people are buying the new home, or are you just there kind of if they're going to the resale properties and having to spend, if maybe you spend 450 on a resale home versus 465 on a new construction, but if you buy that 30-year-old $450,000 home, you've probably got $20 to $25,000 worth of work that needs to be done on it. How can a home buyer make that adjustment to the resale property?
Yeah. So a lot of I mean, I start with getting people pre-approved, and a lot of my pre-approvals have gone new construction this past year, which is totally understandable. And I actually tell them you're paying that incentive in the price of the home,
Right.
and just take it, and we'll worry about it. But they use me to kind of make sure that all the numbers are on the up and up, and I kind of help them through the process to make sure that um, they're in it the they're getting their goals now, but also in the future. But yeah, home buyers that are strictly looking at resale, I mean, are you asking about like renovation loans or are you talking about just regular
Not necessarily, just really
purchase?
looking for your advice on what direction people should consider if they are shopping, and where do you see the benefit of the new home versus the resale home? What are you seeing from your perspective?
Yeah, so if somebody comes to me and they're very, very tight on liquid cash, your first time home buyers, I actually think it's better to buy a new home because you've kind of punted that maintenance down the road a little bit because it's a brand new house and they're not going to have to shell out if the AC goes out or anything. But it's just really going to come down to what all the numbers look like as far as debt to income ratio and then assets for closing if we can make that work on a resale versus the new home. So it just
Gotcha.
depends on each scenario. But if my daughter came to me and was asking if I should buy a resale or a new home, and the incentives and everything were pretty equal, I would kind of lean more towards the new home just because she's not going to have to shell out for all those repairs and maintenance.
Got it. Well, and interestingly enough, I had a episode recently with Matt Zalecki, who is from Family Building Company, and Matt is actually building below the $350,000 mark
Wow.
in order to be able to compete in today's entry level market. But in order to do that, he's having to go out to Roxborough,
Yeah.
Smithfield, which,
Hmm.
for those of you that aren't familiar with the map of the triangle, that's probably about a 45 to 50-minute drive from the center of Raleigh, maybe even further in some cases, depending on what part of the triangle you're coming from. So from that first time home buyer perspective, what is the biggest obstacle to getting them qualified right now? Are we seeing student debt? Are we seeing their car payments that are $800 or $900? What are you seeing as a lender that you can share with us that is the biggest obstacle to qualifying right now?
Yeah, it's always going to be debt to income ratio, and it's always going to be the kind of the main Achilles heel in any transaction is using that qualifying income, and making sure that you're getting ahead of verifying their employment to make sure you got the verified income that we could use to close. Because I've seen a lot of deals where that is not done on the front end, and you get to later in the process, and income is kind of cutting the deal down because they're not using or they can't use the income that they originally thought. But debt to income ratio is always going to be kind of the biggest hurdle. I mean, assets is always there too of cash to close and what they're using for down payment, but there's programs out there that we could use. But debt to income ratio with the, the amount of debt people have with car loans, student loans, credit cards, it's been a big hurdle.
So let's talk about that debt to income ratio. I know that in the past, when I was teaching pre-license, for example, and licensing classes in North Carolina, we used to teach, okay, if it's a conventional loan, your qualifying ratios are going to be 28% on the front end, 32% on the back end. For FHA, it was 29 on the front, 41 on the back, and for VA, it was about 45% on the back side, and it was just everything under one fell swoop. Still accurate? Are we seeing those levels boosted
It's a
up
little bit
for people
higher
to be able
now.
to afford?
Yeah, it's a little bit higher now. Like conventional on the back end, I mean, we can, depending on the credit and assets and stuff like that, but you can go a little bit higher, but I've seen kind of the 45 is kind of your average that you want to stay below on the back end.
Okay.
The front end is a little bit different depending on, again, credit and assets that we have, reserves. FHA is, I'm going to say the same, but you can go a little bit higher. Again, it's going to depend on credit and assets. VA, very similar to FHA, but VA technically can go way higher if you have a good file. VA is very unique in how they look at loans. So that one you definitely want to get ahead of things just to make sure we're good to go on the VA stuff.
Okay, so let's transition from there and let's talk buyer's agent compensation. Got to talk about it because
Yeah.
since we talked last, the finalization of the lawsuit and the settlement with the National Association of Realtors and all of the major companies with the class action lawsuit in Missouri. Um,
Hmm.
so I know that I've seen some releases recently where there are certain types of loans that are allowing that compensation, buyer's agent compensation, to be paid as a concession on the contract. What do we need to know about that? I know that some of it is okay and some of it is not okay. Can you walk us through what's allowable and
Yeah,
what's not?
it's going to determine on the loan type and the loan to value ratio. If it's being applied as a concession from the seller, it's looked at as third party sell interested party contribution, and there's always going to be a limit to that depending on down payment and the loan type. So like your conventionals, if you have less than 10%, the max is 3% that the seller can contribute back to concessions. If it's over 10% down, it can go up to 6.
Okay,
Uh,
gotcha. So there's a lot of variables depending on what your investor's calling for.
Correct. Yeah. FHA is a little bit different. It's 6 across the board. So yeah, it's just going to determine on the loan type and how much you have down.
Okay. So new topic. I
Hmm.
want to bring up something. I don't know if you're going to be familiar with this. So I'm just rolling the dice here that maybe you do,
Bring it.
and we'll see what we can do. We're starting to see the advent of offers made on listings that have been on the market for a while, but they're being made as subject to offers. Do you know what that is, and can you explain it in English terms for those listening?
Yeah. So you're saying people are putting an offer on the house and it's subject to their house selling?
No, that's it's not a contingent sale like that. It's meaning that they want to give the sellers money and they want to transfer ownership of the property, but the obstacle seems to be the um oh, what's it called when you sell the house you have to pay off the loan. I can't think of the clause. I'm totally
The,
air
the early
brain
payoff?
dead. Well, it's the requirement to pay off the loan at the time that you sell it, and what they're basically asking to do. And apparently, there's a lot of people in coming from California that are trying to buy subject to. But the due on sale clause, finally thought of it. The due
Yeah.
on sale clause that requires most homeowners to pay off their loan if they
Yeah.
transfer the deed is the obstacle to that one. I'm trying to understand how anybody other than the buyer is benefiting from that. Have you dealt with any of those
I've
and any advice on that?
never dealt with that or even seen that yet. So
All
I
right.
don't know anything
So
about
we'll
that.
wad that one up and throw it away.
Sounds like it's an interesting topic though.
Yeah, I need to get one of my attorney friends on here to
Yeah.
discuss that one because that's one that we're starting to see more often. It's very interesting that as the market gets flatter,
Hmm.
the more
Creative.
unusual
Yeah.
offers we would like to use creative financing. Well, creative financing is kind of like a divorce. Somebody's getting the gold mine and somebody's
Correct.
getting the shaft. And so
Yep.
you have to figure out if you're the listing agent, you have to make sure that you're protecting the seller. And I've found that a lot of those offers are coming over the phone rather than actually being written in
Yeah.
order to be able to not track all the negotiations and everything. So it's intriguing to see all of the
Yeah.
different
When you get
scams, for
more
lack of a better
information on
word.
that, and when you get more information about that, I want to know about that. That sounds interesting.
All right, we'll have to play with that one. So,
Yeah.
uh, tell us what's going on in your world. What are you seeing? Put your crystal ball in front of you and start seeing. Tell me what you see coming in 2025. Not that my predictions were worth a darn in 2024 because my
Yeah.
crystal ball pretty much in July fell off the table and shattered. So, but what are you expecting here?
Yeah, I feel like the Fed's decision this week was more of a kind of wait and see, kind of a pause to see what happens when everybody gets a an understanding of the new president's policies and how that's going to kind of affect the market. There's a lot of talk about tariffs and what that's going to do inflation and all those different things, but nobody's really seen the ins and outs of all the policies. So I think that once he gets in with his whole entourage of people and what they're going to do is going to determine how the rest of the year kind of shapes up. It's kind of a big thing because he's got a lot of things on the table of, the whole Doge committee that's going to
Right,
um, change how effective and how we're running our government. So
right,
there's a lot of things that could change for the better because a lot of the issues of the 10-year staying higher is because of the worry of national and personal debt. And if that gets a handle on it, then we could see the 10-year treasury relax and have the mortgage rates come down. But even if that doesn't happen, we're kind of staying in the same spot. Mortgage rates are going to stay in a range. I think we'll get to 6.5 to where we are now and kind of fluctuate depending on how data comes out. So that I think having a lender that can watch the market and understand when to lock and not lock is beneficial. I do think the amount of transactions going to go up. Um, some people are saying 40, but I think it's going to be more like 10 to 20-ish% higher than what we saw this past year. Um, but I think it's going to still be a good year. There's less realtors, there's less loan officers. You have the experts, the professionals in the business now, and I think it's going to be a really good year. I'm really excited about it.
So that's interesting because I know that we've seen probably 75 to 80,000 realtors leave the National Association of Realtors at least
Hmm.
this year. And of course, in most cases, the dues are due here in the next couple of weeks on December 31st. And then you
Right.
got a 30-day grace period to 30 to 60-day grace period to get those paid. So you made the comment that there are fewer mortgage lenders. Tell me why we're seeing that. Is it just a tougher business to be in these days?
Yeah, it's tougher. There's just not enough transactions. If you kind of cut it down, I mean, we talked about the new home sales. A lot of buyers go to new home sales with those lenders. And there's just not enough transactions for it to go around. Last time I heard in 2024, we had 150,000 registered loan officers. In 2025, we're going to have 93,000.
Wow.
Yeah,
Wow,
that was the last stat I heard.
that's a significant number. So literally losing a third.
Yeah, well, back in 2021, we had over 420,000.
Yeah, that's probably a good thing, I guess. It's
Yeah,
kind of
so
like the real estate business. You can roll a ball down the middle of any main street in small town USA and hit 10 realtors.
yep, yep.
So
So I think that, I mean, with who's left in the business, they're all going to be awesome. Same with the realtors. I think the market's going to be in a good shape. It's been kind of a weird year, but it's been a fun year. But I'm really looking forward to 2025.
so let's talk a little bit about the family debt because we see a
Yes.
lot of people bragging about the fact that they have a 2.9% or 3.1% 30-year fixed on their house. But then they have $20,000 in credit card debt on a credit card that's 22%. That's probably the same percentage all year. If you did the annual interest at least, it'd probably be similar to what you're paying on a $300,000 loan.
Yeah.
What's the best stopgap measure? What is the best technique for getting this lowered?
Well, it depends on their situation and kind of where they're at. But I think a cash out refinance or some type of a home equity line of credit can lessen the amount of money out of pocket so you can attack the debt more. Um, but it just depends on their situation. I mean, that rate is great, but if you're upside down on your car and student loans and credit cards, you're kind of it doesn't matter what that rate is. And most of the time, people don't realize the whole 30 years of 2.9. Most people sell or refinance in between 4 and 7. I think that's going to raise up a little bit, but not by much. So that rate really doesn't, you're not going to see the full benefit of that 2.9.
Gotcha. So if somebody does a HELOC or a fixed term loan as a second mortgage, are those deductible on taxes as a HELOC for like the mortgage interest deduction?
I'm going to refer you to your CPA on that one.
Refer to my CPA. Okay, got it. Yeah, I should know better being an instructor than asking that question, but it's
Yeah.
actually something I got into a conversation with a friend of mine that's got a refinance, or he's either got a refinance or he's got to take out a HELOC or a short-term loan,
Yeah.
and because they've got some major upgrades that they want to do to the house. And he asked me, he says, am I going to get the mortgage interest deduction? And I said, well, if you refinance the whole thing, I know you will. That's obvious because it's first mortgage, but I'm not
Yeah.
familiar with the rules and regulations of the second mortgage to be able to speak to them. So I think you're right. We'll get Rob Mitchell on here
Yeah.
and
I would,
get him
yeah,
talking about that.
I would definitely refer that to a CPA. I don't want to get people in trouble or myself in
Absolutely.
trouble.
I love the way that you're being careful. I love the way that you don't want to offend anybody. I appreciate that. That's a very
Yeah.
good
Yeah.
thing. So,
Let me ask you, what is your prediction for next year? And what are you excited about?
as far as 2025 goes, I had one of the worst years that I've had in a long time in terms of income from the real estate sales side. But I'm still more than quadruple what the average income is. So I can't really complain much. even
Yeah.
though it was a bad year. And part of that was because I spent a lot of time traveling this year. We did a lot of stuff. We were very fortunate that we were able to do that. I'm already seeing an uptick in my January closings. I've already got transactions on the book for the next 4 or 5 months. So I've got things that are in process. The pipeline is what I focused on in the fourth quarter. And,
Mhm.
and of course, when you focus on your pipeline, you drop a few things in that are actually going to close quicker than sooner than later. And so that's a good thing. In the triangle market this year, we're going to end up selling between 34 and 35,000 homes, it looks like. And that's for those of you that have never watched the podcast before, my stats are for the 16 county area that makes up the triangle region of North Carolina. So it includes Raleigh, Durham, Chapel Hill, Cary, et cetera, and the metros around those areas. But when you look at it, that's still the number of sales is we got to go back pre 2014
Yeah.
to see that few sales. So I think that's going to be, I think we are going to see an uptick. I think we're going to lose a bunch of realtors. I think there are going to be a lot of people that just say, forget it. I'm going to keep my real estate license. And if I get a transaction, I'll look at stuff through Zillow and do it that way. But of course, in North Carolina, in order to advertise a listing, if you get a listing and you advertise it, you have to have a broker in charge supervising you, or you have to be a broker in charge. Well, in order to do that, you got to have a firm license, and it adds other
Mhm.
expenses on top of it. So I'm not sure how people will react to that yet, but I think we're going to learn that very quickly in the first 6 months of 2025. Does it cut out the number of members of the local MLS system? Absolutely. I'm guessing there will probably be 500 or 600 that say, forget it. There's another element that is saying, I don't want anything to do with the National Association of Realtors anymore. And so they'll
Mhm.
drop their membership in NAR. And when they do that, they're not going to realize that they also drop their membership in the North Carolina Association of Realtors. And one of the main things that NC Realtors provides is our contract forms. So if you
Mhm.
decide not to be a realtor, that means you now have to come up with contract forms of your own, which means you have to pay an attorney, and it'll be far more than what your membership is to the
Yeah.
National Association of Realtors. So it's kind of a catch-22 for a lot of people, and I think that's what we're going to see in 2025 is where does the balance of power come to?
Yeah. Um, I'm gonna kind of put you on the spot if that's okay.
Sure.
So as a lender, we try to partner with referral partners and agents. And what are some things in 2025 that lenders can do to come alongside realtors to help sell
So
listings or get buyers to move off the fence?
yeah, I'll tell you, number one is something as simple and I'm going back to the 1990s with this. So I know you're going to go, wow, we're going back to the future basically. But I really like having a document in the files to give to a prospective buyer that has a breakdown. Here's what a conventional loan with 10% down looks like. Here's what a conventional loan with 20% down looks like. And here's the difference with an FHA. Remember, we used to do those, it was called a
Yep.
3-up delivery, is what my old mortgage lender back in the 90s. I hadn't thought of Jim in a long time until just now. But Jim used to do that for me at every single listing he would watch the market. He would see that I got a new listing and I didn't even have
Yep.
to ask for it. He would send it. I love having that type of methodology to reach out to the agent before they call you. A lot of agents are really good at asking mortgage lenders to pay for advertising and sponsorships, and hey, I
I
want
know
you
a
to
few of
sponsor this event and that event, and they're really good at that, but they don't actually give you anything back. And I think if I've got that document and it's got your contact information at the
them.
bottom of it, and I send that to a prospective buyer, especially if they're unrepresented, that's going to be an easy way to pick up the phone and call somebody because you're already somewhat familiar with the property. I think that's one way to do it. Another thing that I would love to see is more lenders sitting in an open house for a couple of hours with an agent, especially when you know it's going to be a busy one, because the ability for that lender to answer the financial questions that come in, you don't have to have a written agreement in order to answer those questions. I do now
Yeah.
because of the
Yeah.
new rules with the lawsuit. So if you're there, you can answer some questions that I don't have. I'm not legally able to
Mm,
answer until they sign a document with me.
yep.
And one of the challenges that we have with the new settlement is in North Carolina, you have to have a written agreement to declare that agency if you are a realtor. Now, if you're not a realtor, all you have to do is the working with real estate agents disclosure, and you can show the property under an oral buyer agency agreement. Because of the fact that I am a realtor, that means I got to have a document signed before I go over the threshold for the first time with somebody. So if somebody calls about a listing and I meet them at that listing, and that means I got to get them to sign an agreement on the hood of the car, basically. It's kind of like
Yeah.
going to dinner with it on a first date, and before you order your drinks, you say, by the way, you're ready to get married. And I think that's going to make some buyers nervous
Yeah.
in that aspect. So anything that we can do to soften that blow and to create relationships face to face. I think there are a lot of mortgage lenders right now that are way too dependent on their portals for people to send information in. And we have transactions that take place where there's $750,000 being loaned and you never see the face of the mortgage lender.
Yeah.
I think little things like that make a huge difference. I love the way that a lot of mortgage lenders these days are updating throughout the process. Here's your
Yeah.
once a week update. Here's our checklist. Here's what's been checked off. The appraisal's been done. This has been done. That's been done. You know, we're waiting on the conditions to be met. Okay, conditions have been met. We're waiting for the signatures on the buyer disclosure statements so that we can be clear to close.
Yeah. Yeah.
I love that process. And I think it's more important than ever that the agents have a relationship with the lenders. And I'm not just talking about the buyer's agent
Correct.
relationship with the lender. As a listing agent, when I get an offer from a client and I read your name on the pre-qualification or the pre-approval letter, I'm picking up the phone and I'm calling you.
Hmm.
And if you don't call me back for 2 or 3 days, that's going to affect the ability of the seller to negotiate. And believe it or not, there are lenders that do that. You know,
Yeah.
and we have the same problem for realtors that don't bother to return phone calls. They get a lead call, you don't hear from them for 4 or 5 days. I've been guilty of that in the past. I've really tried to focus on returning those calls as quickly as possible. But
Correct.
those are just some of the things that I'm seeing as
I like it.
necessary in from the mortgage standpoint. I think it's going to have to be more of a partnership than ever.
I agree.
You know, one of the things that I did this year that I was really floored when I was looking back at the numbers. I worked with 4 home buyers this year, which is a lot for me. You know, normally I do maybe 1 or 2 home buyers a year. Most of my business is listings, but I did 4 home buyers this year. None of them were over the age of 35.
Hmm.
And I was kind of blown away with that. You know, when you look at the stats and we know that the
Right.
average age of the first time home buyer was 38 this year, according
It's
to
insane.
NAR. And
Yeah.
here I am working with everybody that I'm working with. You know, I've got a 32-year-old that was highly qualified, made great money buying her first house. And she ended up being able to buy a better property than she was even thinking because we got lucky with the timing of the rates in September,
Yeah.
that 2 weeks before the first rate cut, when
Correct.
everybody was thinking it was going to be a little bit more. When you told me that it was going to be a little bit more, that's when I told her, said, call your lender because this guy knows what he's talking about.
Yeah.
So I think you're going to see more of that. I think there's a lot of first-time buyers that are going to be using a very popular bank in order to get some money from them for their first purchase, as the bank of mom and dad.
Yep.
Um, we
We're
see
seeing that a lot.
yeah, 38% of first-time home buyers are actually paying cash for their home, and they're getting the money from mom and dad because mom and dad are saying, look, you're going to get an inheritance from me. Let me go ahead and help you now, and it'll be like us investing because you're saving the cost of renting and you're actually going to get something out of the appreciation value. We're seeing that a lot, but there's a lot of millennials that are and Gen Zers that are going to be depending on mom and dad's inheritance in order to be able to buy. So
Yeah.
that's kind of my market wrap on what I'm expecting next year. The question is, what happens with the administration and what is the fiscal policy? What is the financial policy? What happens with the Department of Justice?
Yep.
Is it weaponized? Is it not? There's although we know who's going to be the president and we know what he did last time, I think there are some question marks this time that are a little bit different. You know,
Yep.
Elon Musk and Vivek Rama, whatever his name is, I never
Yeah.
can pronounce that, but they seem to have a lot of influence with what's going on. And
Right.
and I don't want to get into a political discussion because it's neither here or there. Because I'm going to sell my houses no matter what, no matter who's up there. But I think that does affect monetary policy, and I think that's something that we as an industry are going to have to keep an eye on, and it's
100%.
more of a play than ever.
Yeah, I agree. No, I like it with all you said. I put you on the spot and it was like a 10-minute explanation. I like it.
Yeah, my wife says that I can talk a wall into submission if she locks me in the room. So, all right. So, Scott, I'll finish up this way, like I always do with my guests. What have I not asked you about that you want to talk about today? What do we need to know that Scott wants us to know?
Yeah. Well, do you have any big trips planned next year?
Yes, I'm going to Albuquerque, New Mexico at the end of February, and then
For
vacation.
is that
So
when they do the hot air balloon thing?
no, my wife works with Edward Jones, and they hit
Yeah.
like this really cool milestone with Edward Jones. If you know what level 10 is at Edward Jones, you'll know how big of a deal it is. It's like
Yeah.
only like 1,500 people in the country have reached this level for Edward Jones. But her boss has taken us out there as kind of the gift for all the hard work that she's done. And then, of course, we have to have a baseball trip.
Yeah.
So we're going to Arlington, Texas to see the Atlanta
Nice.
Braves and the Texas Rangers play. So we're going to cross off another stadium off of our list, and where Kirk's
Cool.
college roommate lives out there with her husband. So we're going to spend a few days with them and go watch some baseball. And
What
then
number stadium is that?
that'll be well, we started over when we started dating. So we've been together for about 6 years, and I think we have about 12 stadiums on our list. I'd have to look at them and count them off, but most everything in the southeast and on the east coast we've been to. We now got to get up into to the northeast, and we've scratched off two west stadiums. We've been to Dodger Stadium, and we've been to Oakland A's to the Coliseum. Of course, they're now going to be, it looks like, in Sacramento for this year, so
Yeah.
that'll be interesting too. So we may have to sneak down there. And then last year we went to Tampa Bay just before the hurricane came through and
Oh
tore the
yeah.
roof off of that sucker. So,
Yeah.
but we'll do that. Our daughter's actually looks like our daughter's going to be working with spring training down in Florida this year,
Nice.
taking pictures. She's in school down in Florida at Tallahassee State. So
That's gonna
pretty
be awesome.
excited. I'm sure there will be a couple of trips to Florida in the spring so that we can catch some spring training baseball and catch some Florida State baseball.
You need to go to spring training in Arizona. There's nothing like that.
You know, I tried to go out there a couple of years ago. I took my daughter out to Tucson to look at UA.
Yeah.
She was looking at graduate schools at that time. As a matter of fact, it was a week before the governor shut down the state of North Carolina. It was March
Hmm.
of 2020. And we were out there, and she had finished up with all of her stuff that she needed to do. Well, I started looking how far Phoenix was. It ended up being almost a 3-hour drive, it looked like, so we didn't go. But that was as close as I've come to going to the Cactus League out there. It's
Yeah,
all
it's so
as
much
you can
fun.
tell. By the way, I'm impressed that you matched me in color with your black
Yeah.
and your Carolina blue today. You look
Well, you
good.
texted me to dress like that, so
There you go. There you go. So, but yeah, as you can tell, we'll continue to do our Carolina baseball season tickets. We're going to
nice.
the first pitch dinner for them, and I'm actually volunteering as the auctioneer for that. So that
Oh,
should
look
be
at
a
you.
lot of
That's
fun.
awesome. That's
Should
fun.
be fun. So, well, Scott, thanks again for your time
Yeah.
today. I greatly appreciate it.
Thanks
Don't
for
forget
having
to
me.
go check out Scott. Give us all those digits and that website again, so we can catch up with you if we need to for business.
Oh, yeah, website. I forgot to mention that earlier. It's just Walton Home Loans. Phone number is 919-530-9977. Email is swalton@novushomemortgage.com.
Walton at novushomemortgage.com. Scott, thanks so much for being on again today. I appreciate your time. I know the time's precious, especially this time of year. I
Yeah.
appreciate you sharing some of yours with us today. Thanks for watching the podcast. We appreciate you being here, the pulse on real estate, and we'll see you again next time. Thanks, everybody.